The Fed is not backing down, as the minutes from the last FOMC meeting were released today. Markets were a little bit mixed today, down at the beginning, up, then down after the Fed minutes, and then back up once everybody realized, wait a minute, we already know what the Fed said. We already know what they're going to do. Higher for longer. We want to see inflation come down. The Fed is not backing down. Participants generally observed that a restrictive policy stance would need to be maintained until the incoming data provided confidence of the inflation that inflation was on a substantial downward path to 2%, which was likely to take some time, the meeting summary stated. In view of the persistent and unacceptably high level of inflation, several participants commended that historical experience cautioned against prematurely loosening monetary policy. So, in a nutshell, they just reiterated what they said. So there was no surprise to the market. A little bit of automated trading, algorithmic formulas, if this, then that kind of happening. And that's why the market's fluctuated a little bit on that. But we'll take a look at what's going on. Here's Bitcoin. Bitcoin had a little bit of a pop today. This is the daily. If you look at it on the hourly, you can see a little bit, larger move and then completely unwinding that with longs and shorts getting liquidated, all the leverage traders out there. Ethereum, same thing, nice little pop. Solana has been on a nice little run here lately, but again, unwinding that move with all the leverage getting taken out of the system. XRP kind of trucking along, had a 1 minute kind of wick the other day. Who knows what that was about? But obviously the big issue with XRP is the lawsuit. And as soon as that gets resolved, that lawsuit with the SEC, you'll probably see a nice little bounce out of XRP and then resume its continuation of the trend, which right now is reverting to where it came from. Pretty much all the cryptos are round tripping. XRP is in the same boat. And, again, the SEC lawsuit is the big issue there. XRP is one of the cryptocurrency projects that does have actual use case and potential, but there's a lot of stuff behind the scenes as well. And like any other crypto project, the founders, create tokens out of thin air, issue them to fund their project, to enrich themselves. Some of these tokens, not XRP, but some tokens, that's all designed as a rug pull. XRP obviously has some real world use cases. They have talent. They're a legitimate, operation in terms of how they're doing things, but you can't create tokens out of thin air, issue them, whether you have donated them or whatever you want to call it, to fund your project and pay yourselves, and not, especially in the United States, not register that with the securities as a security. It's just like issuing stock in a company and pre-IPOs and things like that. There's rules and laws and things that you have to adhere to when you're doing those things. So, the SEC and the courts will sort all that out, and the chips will fall where they will fall. Ultimately, regardless of the outcome of the court case with XRP, the company's not going anywhere, and the use case is not going anywhere. It's just a play on the speculative value of the token while all this is going on. And at the end of the day, what is the market, and how is the market going to value the XRP token? What is it really going to be used for? That's the question at the end of the day that we won't know until the court case is resolved. But regardless of the outcome of the case, Ripple is going to continue to operate. XRP will continue to do what it's doing. And, blockchain technology is what it is. If you're not familiar with blockchain technology, it's basically a ledger. It's a chain of blocks, ledger blocks, where transactions are recorded and validated by computers around the world. Some of them are centralized, some of them are decentralized. Same thing as Bitcoin. So a lot of enhancements and advancements in technology over the last 10 years in the crypto space. A lot more will be coming down line. And then, just like all technology, some will become obsolete and go away, and some will continue and strengthen and build better use cases as they gain mainstream adoption and regulation. So that's kind of crypto in a nutshell. Bitcoin still kind of plugging along in the markets right now, as we've been following the little trend line here. This is the Dow Jones consolidating in this area, trying to figure out what it's going to do, and likely maybe another little bounce over the next few days, and before continuation to the downside. We're through all of the bad news right now with the Fed minutes, everything the market was looking for. So we could expect maybe a little bounce before inflation news is released. If the inflation report is good, markets will respond positively. If it's bad, it'll respond negatively. Then the Fed will come out and say what they've been saying, status quo. They are going to slow the pace of rate hikes. So unless the inflation report is really bad, the Fed's probably only going to do about 25% on the next round of hikes versus 50. So the markets will respond positively to that as the Fed slows down. But here's the thing. So the markets are looking for a pivot. Investors are looking for a pivot. And let's take a look at the daily averages here while we're kind of talking through this. This is the 200 on the red, 100 on the blue, 50 on the green. The Dow is above the 200. It has found support above that. Only one, everybody else is below the 200, 150-day moving average, including Bitcoin, well below all that. Although trying to get above the 50-day, but not quite clearing that 50-day moving average. That would be good. But every time it rejects off that, it kind of loses a little bit of ground there. And that's again what I'm expecting is a test of the lows before any kind of a significant bounce to retest that 100 again before rolling off to newer lows down to that $10,000, $13,000 price range that we're looking at. But back to what we're talking about, inflation and the pivot, is that markets are really looking for and wanting a pivot. Investors are looking for and wanting a pivot. And the markets will initially respond positively to a pivot, but if the Fed pivots, it's usually not for a good reason. It's usually because something has happened, something's cracked. If they have a rapid response pivot, that means something's gone wrong and they've had to respond to correct something in the markets or something in the economy, things like that. So oftentimes the biggest down legs in the market are after, at least in the past, or after an initial Fed pivot or Fed response, other than the exact bottom of 2009 that we looked at. In 2020, when the Fed came in with the bazookas back in 2009, it was a response to banks failing, propping assets up, purchasing toxic assets from the banks, things like that, and the Treasury coming in and propping up. They were bailing out companies. They were bailing out banks that had bad mortgages on their books, all kinds of things going on. So that created that V-shaped bottom out of the 2020 or 2009 bottom. But again, it took 6-7 years before it reached previous levels after that sell-off. 2020 was very quick because they came out with a bazooka and pumped a couple $1 trillion into the economy, gave everybody a bunch of money, supported all the markets and the banks and everything, so propped everything up. So that was a quick V-shaped recovery. But this round is different. Inflation was not a problem in any of those events in the past. Even in 2009, inflation was not even anywhere near the radar. So inflation is the big issue now. That'll do more damage than anything else. So if the Fed cannot get inflation under control, which the sticky components of inflation are food, housing, and service industry with labor market. Labor market is still has a lot of stress. There's not enough demand. There's not enough supply to match the demand for jobs. So that's keeping wages high. That's keeping prices high. But the other side of the coin is inflation. So if inflation drops, so from a market's standpoint and valuation of the market standpoint, getting inflation under control on the one hand is good because that helps the consumer, it helps households, and it keeps the economy more healthy and stronger. So you have to get inflation under control. But the other side of the coin is once you get inflation under control, prices drop. That means earnings are going to be affected because top line sales are going to drop. Profits are going to drop. That's going to affect earnings, and stocks are supposed to be priced on earnings. However, the last few years, earnings have had nothing to do with the valuations on stocks. It's been the free flow of liquidity and zero interest rates, and people can borrow money and lever everything up, just like real estate and everything else. So those are the things that the market is digesting. So right now, we have clear sailing until we get the inflation report coming out here. Probably think it's next week. And then the Fed doesn't meet until February to respond to it. So the inflation report is the next big thing that the markets are going to be watching as we continue to understand. And then earnings, obviously earnings season is going to be very important. So then we can understand what the impact has been on companies and what their future guidance is. And I think a lot of companies are just going to remove forward future guidance or lower it significantly. So that could have an effect on the market. So we should see some green days here for a couple of days, hopefully, ahead of all these things, and then prepare for a potential big downslide from there and a retest of the lows in the markets, including Bitcoin and crypto, before we put that bottom in ultimately, over the next 4 to 6 months, somewhere around there, if everything goes well. and the Fed can land the plane softly or with very limited damage, the markets can try to put a bottom in and consolidate and look for a return to good times. So these are the things I'm looking at. I'll see you